Assalamu alaikum, friends. So, probably the last in the series of Ijarah. So, this was the example we were working on for demonstrating how to carry out the lesser side accounting. So, this was the example. We had a financial institution that is leasing a server cluster to some commercial client for which the initial cost is $120,000. The life and the Ijarah period is 4 years. The annual rental is 40,000. It means a total of 160,000 has to be paid, and it is a Ijarah MBT. So eventually there will be a transfer via gift or maybe through the sale. We shall see both entries, and we are going to see the accounting treatment under FAS 32, and the underlying effective return method we have to demonstrate. So the underlying rate is 12.59% when 40,000 is taken as an annuity for a present value of 120,000 for a period of 4 years. So had it been a finance lease, a capital lease, a conventional lease, this 120,000 would have been treated as a loan, and under the effective interest method, what should have been the amortization schedule of this loan. So this will also tell us the income that has to be recorded under the effective interest rate method or effective return rate method. Keep in mind the total income is 160 minus 120, 40,000. Under the straight line method, we recorded the income straight line, so 40,000 divided by 4, 10,000 each month. Under the effective return method, again we shall be recording income of 40,000 but in a different manner. So towards the initial period, my total investment in the asset is 120,000. So 12.59% of 120,000 is actually 15108. Let's try to verify it. 120000 into 0.1259, so 15108, right? So this is the return for the first period because this was the amount of investment in the asset. And if we deduct this return from the gross annual rental, then this is the cost of the asset which is actually we are recovering. Keep in mind that this is only for the calculation purposes, right? There is no cost we are recovering. We are just charging the rental from the Islamic Sharia point of view. So the outstanding investment in asset that would have been 95108 for the next period. So the next period income would come out to be this, and similarly the schedule continues, and a total of 40,000 of income has to be recorded. So now we see how do we record it, right? So of course the right of use asset when we purchase it, this is I think this is the lessor side of accounting. So let's go to the lesser side of accounting, right? Lesser accounting. So when we purchase the asset, we record the asset as a debit entry, increase in asset, and decrease in cash as a credit entry, right? Okay, so towards the end of the first year now, the first important thing to note is that we record the depreciation. So depreciation has to be recorded on the straight line method. So we record it as we did record under the straight line income recording as well. So it's same. Then the Ijarah receivable. So we just noted that the income under the effective return rate method has to be recorded as, we saw here, 15108, right? So this is the net income on Ijarah. So what should be the gross income in Ijarah? Of course, the depreciation of the asset, I am not using the asset for myself. I have actually given out asset on rent. So whatever the depreciation I am incurring, I will charge on. So this is the cost of my asset, and the profit is 1508, right? So how much total I will be charging? I should be receiving 30,000 plus 1508. So I should be receiving 30,000 plus 1508. So this is the amount I record in Ijarah receivable, right? This one. So Ijarah receivable 45108, gross Ijarah income, again this is same 45108. And then how much I receive? I receive 40,000. So cash debit and Ijarah receivable, which is debited here, is credited here by 40,000. So you see there is a mismatch between Ijarah receivable by an amount of 5108. So Ijarah receivable is more debited than credited. Why this is so? Because if you see this schedule, so the income, rather than 10,000, 10,000, 10,000, 10,000 that was under the straight line method, it is more over here. So it means some part of the income is not yet received in cash, so we defer it in receivable, right? And then the second period also it will further increase by 1975, 1974, and in the third period the cash collected will be less than the income, will be more than the income. So the income will be 8446, but the cash collected will be 40,000, which means we are actually liquidating this receivable which was created here. So you can just complete the entries for entire 4 years, and this way you will see that towards the end of the period, the total profit will be 40,000 net Ijarah income, and so this is another way of recording the same. So I prefer this way. So I made these entries for you, right? And my cash will be collected by 160,000. Ijarah receivable will be debit, credit, so will be net, right? So how do we show these balances? How will the financial statements of Lessor look like towards the end of the first year? So towards the end of the first year, the income statement is gross Ijarah income 45108, less depreciation expense for Ijarah asset. So we have a net income of 15108. On the asset side, we have the property, plant and equipment, which is the underlying asset for Ijarah. Value is 90,000, cost minus accumulated depreciation, and there is an outstanding Ijarah receivable of 5108. Keep in mind that since we are recording the depreciation under the straight line method, but the income under the effective return rate method, that's why this 5108 has to be deferred in receivable. If we record the depreciation also on the effective return rate method, then it will not have to be deferred. So it will then follow exactly the schedule. So if straight the conclusion is that under the straight line method, we will have the 40,000 entire rent amount will be received, and the income will be 10,000. So there will be no difference of receivable, Ijarah receivable. Whatever we will record as receivable will be received every period. Income will be same every period for the Lessor. Under the effective return date method, right, I will have to defer some amount of income in my Ijarah receivable. So in the first 2 years, the Ijarah receivable will have a debit balance, but in the next 2 years, since the income will be less, so it will be consumed and it will become zero towards the end of the period. So I hope this is clear. So this completes the Lessor side accounting of Ijarah, and now in the next session we have to discuss some of the impacts of Ijarah accounting, which how to test the understanding for assessment purposes. Thank you.